What is digitization of financial services? The digitization of financial services refers to the transformation of traditional financial processes into digital formats. This shift is more than just moving services online. It represents a fundamental change in how financial institutions operate and interact with customers. Through digitization, services like banking, payments, lending, and insurance are delivered faster, more securely, and with far greater convenience. This transformation is a key driver of modern banking innovation, laying the groundwork for fintech, financial technology, digital banking platforms, and electronic payment systems. With digitization, financial services can be accessed 24/7 from virtually everywhere, reducing reliance on physical branches and paperwork. It also helps institutions leverage data analytics, artificial intelligence, and automation to better serve customers and remain competitive in an increasingly digital world. Digitization in financial services. Digitization enhances both the accessibility and efficiency of financial services. It allows users to conduct banking activities like transferring money, applying for loans, or checking account balances from mobile apps or websites at any time, day or night. This convenience is especially important in today's fast-paced environment, where customers expect real-time services. Operationally, digitization reduces costs by minimizing manual processes and paperwork. It also shortens transaction processing times, enabling banks to serve more customers efficiently. Advanced security measures such as encryption and biometric authentication to ensure data protection and reduce fraud risk. Importantly, digital finance tools also promote financial inclusion, reaching previously underserved populations such as rural communities or individuals without formal banking access. For case study, we have Maybank and CIMB. Maybank and CIMB are among the leading banks spearheading digital transformation in Malaysia. Both institutions offer user-friendly mobile applications, MAE by Maybank and CIMB Clicks, that have redefined how Malaysians manage their finances. These apps provide a full suite of digital services, including account monitoring, bill payments, money transfers, loan applications, and even investment features. They also integrate modern technologies like biometric login for enhanced security and real-time transaction alerts to keep users informed. Features such as QR Pay and in-app budgeting tools improve both convenience and financial literacy. The success of Maybank and CIMB in this space shows how legacy banks can stay competitive by focusing on customer experience and embracing secure, innovative digital platforms. For case study, we have Maybank and CIMB. Maybank and CIMB are among the leading banks spearheading digital transformation in Malaysia. Both institutions offer user-friendly mobile applications, MAE by Maybank and CIMB Clicks, that have redefined how Malaysians manage their finances. These apps provide a full suite of digital services, including account monitoring, bill payments, money transfers, loan applications, and even investment features. They also integrate modern technologies like biometric login for enhanced security and real-time transaction alerts to keep users informed. Features such as QR Pay and in-app budgeting tools improve both convenience and financial literacy. The success of Maybank and CIMB in this space shows how legacy banks can stay competitive by focusing on customer experience and embracing secure, innovative digital platforms. Digital payments and wallets. Mobile payment solutions and digital wallets like GrabPay, Pulse, Touch 'n Go, and Maybank's MAE have gained significant traction. These digital payment platforms have gained significant traction due to several factors. Digital payments offer a quick and convenient way to make transactions. Users can simply tap their smartphone or scan QR codes to complete a payment. Many of these platforms offer incentives such as cashback, discounts, and rewards for using their services. This encourages users to adopt and stick with these platforms. These platforms have established partnerships with a wide range of merchants, making it easy for users to use them for various services like shopping, dining, transportation, and more. These platforms typically have robust security measures in place to protect users' data and transactions, which builds trust among users. They have played a significant role in increasing financial inclusion, providing access to digital financial services for people who may not have had access to traditional banking services. GrabPay. GrabPay is a mobile wallet offered by Grab, a Southeast Asian ride-hailing and technology company. Initially started as a way to pay for rides and food deliveries through the Grab app, it has since evolved into a versatile digital wallet that allows users to make payments for a wide range of goods and services both online and offline. GrabPay can be funded through various methods, including credit or debit cards, online banking, and cash. Boost. Boost is a mobile wallet developed by Axiata Digital, a subsidiary of Axiata Group Berhad. It's an widely used e-wallet in Malaysia that allows users to make payments for various services, including bill payments, shoppings, and even to merchants who accept Boost payments. It also offers features like cashback rewards, promotions, and peer-to-peer money transfers. Touch 'n Go e-wallet. Touch 'n Go is a well-established brand in Malaysia, known initially for its contactless payment cards for tolls and public transportation. The Touch 'n Go e-wallet extends this concept to mobile devices, allowing users to make payments for a wide range of services, including transportation, retail, and online purchases. It's widely accepted in Malaysia, is integrated with various services and merchants. Maybanks, MAE, Maybank Anytime, Everyone. MAE is a digital banking platform developed by Maybank, one of the largest banks in Malaysia. It includes mobile wallet features that allows users to make payments using a visual prepaid card linked to their MAE account. Users can also perform various banking activities through the MAE app, making it a versatile tool for both payment and basic banking services. Robo-advisors and wealth management. Robo-advisors are automated investment platforms or financial technology platforms that use algorithms and automation to provide investment advice and portfolio management. They offer lower fees compared to traditional financial advisors and use data-driven strategies to optimize investment decisions. Robo-advisory platforms provide automated investment advice and portfolio management services. They use algorithms to create diversified investment portfolios tailored to individual risk profiles. Robo-advisors example in Malaysia is Stashaway. Stashaway is a prominent robo-advisor in Malaysia. It offers a range of investment portfolios that are customized to individual risk profiles and financial goals. Stashaway uses a proprietary investment strategy known as economic regime-based asset allocation. Second, Wahid Invest. Wahid Invest is an Islamic robo-advisor that focuses on providing Sharia-compliant investment portfolios. They offer halal investment options for investors who want to adhere to Islamic financial principles. Other than that, MyTio is another robo-advisor that allows investors to create diversified portfolios based on their investment objective. It offers both conventional and Islamic investment portfolios. Blockchain and cryptocurrencies. Blockchain technology and cryptocurrency have the potential to bring significant advancement to financial services, and these innovations are also making strides in Malaysia. Malaysia has seen a growing interest in blockchain technology and cryptocurrencies. Platforms like Uno and Tokenize allow users to buy, sell, and trade cryptocurrencies like Bitcoin and Ethereum. Several Malaysian companies and startups are actively developing blockchain-based solutions, showcasing the country's growing interest and investment in this transformative technology. Blockchain technology is a decentralized and distributed ledger system that records transactions across multiple computers. It operates on a secure, immutable chain of blocks, each containing a batch of transactions. This technology ensures transparency, security, and tamper resistance, making it a foundational innovation for various applications beyond cryptocurrencies, including supply chain management, smart contracts, and digital identity verification. In Malaysia, blockchain technology is gaining traction across various industries, including finance, supply chain, and healthcare. The government has shown interest in exploring blockchain's potential for enhancing transparency and efficiency in administrative processes. Cryptocurrency. Bitcoin, the first and most well-known cryptocurrency, is widely traded and accepted in Malaysia. Cryptocurrency exchanges provide a platform for Malaysians to buy, sell, and hold Bitcoins for various altcoins. Malaysia has been working on establishing a regulatory framework for cryptocurrencies. The Securities Commission Malaysia has issued guidelines for initial coin offerings (ICOs) and digital asset exchanges to ensure investor protection and market integrity. Malaysia has several digital asset exchanges such as Luno, Tokenize, and Synergy, which provide a platform for users to trade cryptocurrencies. These exchanges must comply with the regulatory requirements set by the Securities Commission Malaysia. Cryptocurrency have the potential to promote financial inclusion, allowing individuals without access to traditional banking services to participate in the financial ecosystem. Some businesses in Malaysia accept cryptocurrency as a form of payment. Insurtech, insurance technology, is a burgeoning sector within the fintech industry that's reshaping how insurance is bought, sold, and managed. They offer digital platforms for comparing and purchasing insurance policies, streamlining the process for consumers. In Malaysia, startups like Policy Street are at the forefront of this transformation. Some insurtech platforms, including Policy Street, may also offer digital tools and processes to streamline the claim filing the processing. Insurtech platforms like Policy Street have significantly expanded access to insurance products, especially among demographics that may have been underserved in the past. The presence of insurtech startups has increased competition in the insurance industry, leading to more competitive pricing and improved offerings. These platforms are driving the digital transformation of the insurance industry in Malaysia, encouraging traditional insurers to adopt digital technologies. The digital economy refers to an economy that is primarily based on digital technologies, encompassing various sectors where digital technologies play a significant role in driving growth, productivity, and innovation. In Malaysia, the digital economy has emerged as a key driver of economic development and diversification. First, e-commerce. Platforms like Shopee, Lazada, and Zalora enable online buying and selling of goods and services. Second, fintech and digital payments. Services like GrabPay, Boost, and Touch 'n Go e-wallets facilitate digital payments and financial technology. Third, tech startups and innovation hubs. Organizations like Magic support tech startups and entrepreneurs through programs and funding. Fourth, digital education. Platforms like Coursera, Udemy, and iTrain offer online courses and skills development. 5. Smart cities and IoT. Initiatives like the Smart Selangor Command Center use digital technology to enhance urban services. 6. Digital tourism. Platforms like Agoda and Airbnb offer online booking services, while virtual tours provide immersive travel experiences. These examples illustrate how Malaysia's digital economy spans various sectors, driving growth and societal advancement. The government and private sector continue to invest in its development. Crowdfunding enables businesses or individuals to raise money from a large number of people, usually via online platforms. There are several types of crowdfunding, such as equity-based, where backers receive shares in return for funding. Other than that, reward-based, where contributors receive gift or early access to products. And property crowdfunding, which pools investor funds for real estate projects. In Malaysia, Pitch In and EDIS are prominent crowdfunding platforms. They support startups and social enterprises by providing an alternative to traditional funding channels. Crowdfunding is not only a financial tool but also a way to validate business ideas and build community support. Marketplace lending. Marketplace lending involves the use of digital platforms to connect borrowers directly with lenders, bypassing traditional banks. This model provides borrowers with easier access to funds while offering lenders attractive return. It typically uses data analytics for credit scoring and risk assessment. Although still emerging in Malaysia, marketplace lending shows promise, especially for underserved SMEs. The success of this model depends on strict regulatory frameworks to protect users and ensure fair practices. If well managed, it can complement the formal financial sector and increase access to credit. Peer-to-peer lending or P2P lending. Peer-to-peer lending platforms allows individuals or businesses to obtain loans directly from other individuals through a digital platform. This model democratizes lending by opening up opportunities for both borrowers and investors. In Malaysia, Fundastic and Microlip are registered P2P platforms regulated by the Securities Commission Malaysia. These platforms offer financing to SMEs, startups, and micro-enterprises that may struggle to secure loans from traditional banks. At the same time, individual investors can diversify their income by funding loans in return for interest. P2P lending plays a critical role in financial inclusion and SME development. So, the conclusion is, the digitization of financial services has fundamentally changed how financial transactions are conducted, making them faster, safer, and more accessible. From digital banking apps to blockchain innovations, the financial landscape is becoming increasingly tech-driven. Malaysia has made significant progress in adopting digital banking, e-payments, and alternative financing. Fintech innovations are enhancing user experiences, improving financial literacy, and expanding access to essential services. At the same time, regulatory bodies such as Bank Negara Malaysia and the Securities Commission play an essential role in maintaining oversight, ensuring market integrity, and protecting consumers. Innovations transforming financial services. Innovative technologies such as AI, machine learning, blockchain, and big data analytics are transforming the financial services sector. These tools enable automation of processes, personalized customer engagement, and efficient data-driven decision-making. For instance, AI chatbots provide instant customer support, while machine learning algorithms detect fraud patterns in real time. Automation reduces human error and cut costs, while data analytics help financial institutions understand customer behavior and offer tailored products. These innovations drive the ongoing evolution of the financial industry towards greater efficiency, security, and personalization. Smartphones have revolutionized the way financial transactions are conducted. Smartphones have transformed financial transactions, offering convenient access to a range of services. Mobile banking apps empower users to manage accounts, transfer funds, and pay bills. Mobile banking apps allows users to check balances, transfer funds, pay bills, and even invest, all from the convenience of their phones. Additionally, mobile wallets and payment apps like Apple Pay, Google Pay, and various others have gained popularity for making contactless payments. This includes checking account balances, viewing transaction history, and managing accounts. Users can transfer funds between accounts, make payments to other individuals or businesses, and even set up recurring payment for bills. Mobile wallets can be used for online shopping as well as for making purchases in physical stores, making the payment process faster and more convenient. Investment apps provide users with the ability to buy, sell, and manage investments like stocks, bonds, mutual funds, and ETFs directly from their smartphones. Mobile banking apps incorporate robust security measures including password protection, biometric authentication like fingerprint or facial recognition, and encryption to safeguard user data. Artificial intelligence, or we call it as AI, in financial services. Artificial intelligence has emerged as a transformative force in Malaysia's financial landscape. One of its most impactful applications is fraud detection, where AI systems analyze large volumes of transactional data to identify unusual patterns and flag potentially fraudulent activities in real time. AI-powered chatbots also play a key role. Banks and fintech platforms deploy this automated assistant to handle routine inquiries such as account balances, fund transfers, or card block requests, offering 24/7 multilingual support without the need for human agents. Moreover, AI enables personalized financial recommendations by analyzing users' spending habits, saving goals, and risk profile. Robo-advisors in Malaysia leverage this insight to suggest tailored investment plans, asset allocation, and even budgeting advice. Through AI, financial service providers can deliver faster, smarter, and more customer-centric experiences, improving both its efficiency and trust. Machine learning in financial technology. Machine learning is a specialized subset of AI that empowers systems to learn from data patterns and continuously improve without explicit programming. In Malaysia's fintech realm, machine learning plays a foundational role in credit scoring. Models analyze factors like income, credit history, and spending behavior to determine loan eligibility, enabling faster and more equitable lending decisions. Additionally, machine learning excels in fraud detection by recognizing anomalies in transactions that deviate from established norms. It also enhances portfolios management, where investment platforms use machine learning to optimize asset allocation based on market trends and historical performance. Importantly, machine learning driven chatbots and virtual assistants interpret natural language input, providing contextual responses and even handling loan applications or customer onboarding. Together, machine learning data centric intelligence enable fintech providers to automate processes, reduce risk, and tailor services to evolving client needs. Internet of Things or IoT and financial services. The Internet of Things integrates everyday objects with internet connectivity, transforming them into intelligent data sources. In Malaysian fintech, an outstanding example is the use of wearable devices like fitness trackers and smartwatches linked to insurance programs. Insurers such as Hong Leong Assurance reward policyholders for healthy behaviors, with discounts or premium reductions under plans like HLA Beyond Fitness. IoT also supports contactless payment via smart wearables, enabling seamless transactions in retail and transportation. This technology enhances engagement by creating integrated user ecosystem. Like financial institutions can incentivize behavior, assess risk more dynamically, and deliver services that are both personalized and embedded in daily life. Blockchain technology in fintech. Blockchain provides a secure, decentralized digital ledger system that ensures data integrity and tamper-resistant. Beyond cryptocurrencies, its applications expand into areas like supply chain financing, where stakeholders can trace goods in real time, reducing fraud and boosting transparency. In Malaysia, palm oil producers are exploring blockchain to verify authenticity and sustainable sourcing. Blockchain also facilitates cross-border payments with reduced reliance on intermediaries. CIMB Group collaborated with Ripple to pilot near-instant cross-border fund transfers between Malaysia and Thailand. Another application is digital identity management, where blockchain offers secure, sovereign identity capabilities, enabling citizens to control access to personal data and authenticate transactions. Through this innovation, blockchain enhances transparency, trust, and efficiency across financial services. In fintech, data mining is used to extract valuable insight and patterns from large volumes of financial data. The goal of data mining is to transform raw data into actionable information that can be used for making informed decisions, solving complex problems, improving customer experiences, detecting fraud, and gaining a competitive advantage. Fintech companies use data mining to group customers based on spending behavior, income levels, demographics, and preferences. This allows for targeted offerings and promotions. Payment platforms like GrabPay and Boost analyze user behavior to offer personalized incentives. Data mining evaluates historical financial data to determine creditworthiness, aiding in accurate lending decisions and interest rate determination. Peer-to-peer lending platforms like Fundestic use data mining to assess borrower credit risk. Banks in Malaysia use data mining to monitor transactions in real time for potential fraud by identifying suspicious transaction patterns, helping to prevent fraudulent activities. Robo-advisory platforms like StashAway use data mining for investment recommendations. Data mining analyzes historical market data to inform investment decisions, including predicting stock price movement and optimizing portfolios. Data mining typically involves several steps. First, data collection, gathering relevant data from various sources which can include databases, spreadsheets, websites, and more. Second, data pre-processing, cleaning and preparing data for analysis. This may involve tasks like removing duplicates, handling missing values, and normalizing the data. Third, exploratory data analysis, examining the data to understand its characteristic distribution and relationships between different variables. Fourth, data transformation, converting and structuring the data in a way that is suitable for analysis. This may involve tasks like aggregating, summarizing, or creating new features. Fifth, modeling and analysis, applying data mining techniques such as machine learning algorithms, statistical methods, or other analytical approaches to identify patterns and relationships in the data. 6. Evaluation, assessing the performance of the models or algorithms to ensure they are providing meaningful and reliable results. 7. Interpretation and visualization, interpreting and finding from the data mining process and presenting them in a way that is understandable and actionable. Examples of innovation in Malaysian fintech. Malaysia has embraced a wide range of fintech innovations that have significantly enhanced the delivery and accessibility of financial services. One notable example is the widespread use of smartphones, which have transformed financial transactions by offering convenient access to mobile banking apps and mobile wallets. These applications allow users to check balances, transfer funds, pay bills, and even invest, all from their smartphones. They also support contactless payment through platforms like Apple Pay and Google Pay, enabling a faster and more seamless customer experience. In the realm of cloud computing, fintech companies in Malaysia benefit from remote access to and software that allows secure storage, analysis, and processing of large volumes of financial data. This supports scalability, security, and regulatory compliance. Applications of cloud computing in Malaysia include digital-only banks, digital wallets, robo-advisory platforms, and regulatory reporting systems. Artificial intelligence has also found numerous applications in Malaysia fintechs, particularly in fraud detection, customer service chatbots, and automated credit scoring. AI-powered innovation enhance decision-making and create more personalized financial solutions. Moreover, blockchain is being explored by institutions such as CIMB Group and Ripple, who collaborated on cross-border payments. Other sectors, including supply chain and identity management, are also leveraging blockchain for transparency and fraud prevention. These examples illustrate Malaysia's dynamic fintech ecosystem, showcasing how technological innovations are reshaping the financial landscape with improved accessibility, efficiency, and user-centric services. Impact of innovations on financial services in Malaysia. The collective impact of fintech innovations in Malaysia has been profound, fundamentally reshaping how financial services are delivered, assessed, and experienced. These technological advancements have enabled financial institutions to modernize infrastructure, enhance operational efficiency, and improve the overall quality of service. Increased use of cloud computing has facilitated real-time access to financial information and allowed companies to analyze extensive data, supporting smarter decision-making. As described in the material, cloud services have enabled financial institutions to transition from traditional IT infrastructure to scalable, cost-efficient, and secure digital environments. AI and machine learning have significantly boosted efficiency and accuracy in critical processes such as fraud detection, customer support, investment portfolio management, and credit scoring. For example, Malaysian banks use AI-powered chatbots to handle customer service requests 24/7, increasing satisfaction and reducing human resource pressure. Security has also been strengthened through technologies like blockchain, which provides tamper-proof, transparent transaction records. It allows for secure authentication, digital identity verification, and real-time settlement, minimizing reliance on intermediaries. The use of IoT in financial services, for example, wearable devices linked to insurance policies or health monitoring, has also enhanced customer engagement and personalization. Together, these innovations have improved not only efficiency and security, but also the overall customer experience, positioning Malaysia as a forward-thinking fintech hub in the region. Future trends and possibilities in Malaysian fintech. Looking ahead, The future of fintech in Malaysia is poised to be shaped by continual technological advancements and increasing digital integration. As mentioned in the material, emerging technologies like AI, machine learning, blockchain, and IoT will continue to drive innovation, offering more secure, efficient, and personalized financial services. One major trend is the increased use of data-driven decision-making powered by cloud computing and AI. Financial institutions will likely deepen their use of predictive analytics for risk assessment, fraud prevention, and investment optimization. Machine learning algorithms capable of analyzing large data sets and identifying patterns will play an even greater role in automated underwriting and portfolio management. Blockchain is expected to expand beyond its current applications in cross-border payments and supply chain transparency. The Malaysian government and corporations are actively exploring blockchain for digital identity management, asset tokenization, and more efficient e-government services. The Internet of Things (IoT) will continue to revolutionize customer engagement, particularly in insurance and health-related financial services, through wearable devices that track and transmit health data for customized financial products. As these technologies evolve, financial inclusion is also expected to grow, reaching previously underserved populations through mobile banking, P2P lending, and low-cost digital financial services. In conclusion, Malaysia's fintech landscape is on trajectory of rapid growth, underpinned by innovation, regulatory support, and a tech-savvy population. The future promises smarter, more inclusive, and highly adaptive financial system.